Hi, welcome to Arkintel. Australia just posted a solid GDP growth. The ruling party tightened its grip on power. On paper, everything looks like a win. But for Australians themselves, they are getting poorer. Incomes are shrinking, productivity is sinking, debt is rising, and behind the upbeat headlines, the economy is being quietly propped up by immigration and government stimulus. The cracks aren't loud, but they are real, and what they reveal is unsettling. This isn't a country charging ahead, it's one running out of momentum. Let's expose what's really happening inside one of the richest nations on earth and why the lucky country might be facing a reckoning. Let's discuss. Australia was once seen as untouchable. Between 1991 and 2020, it dodged recession for nearly 3 decades straight, a world record. What made this possible? Two rare forces working in tandem. First, an abundance of raw materials, iron, coal, gold, oil, lithium, shipped globally, with China as the biggest buyer. Second, a highly developed domestic sector. Financial services, advanced education, high-end tech, these weren't just side notes, they were pillars. Together, they built a hybrid economy, part resource-rich exporter, part modern service powerhouse. This unusual combo helped Australia shrug off crises that rocked other nations, like the 1997 Asian meltdown and the 2008 global financial collapse. Even when COVID hit, hopes were high. Yes, Australia slipped into recession for the first time in 30 years, but many believed its dual-engine economy would bounce back fast. And for a while, it did. Post-pandemic inflation hit hard globally, but Australia had a cushion most countries didn't, a commodities boom. As energy prices soared, so did tax revenues. Between 2022 and now, the Treasury's income estimates jumped by over 350 billion Australian dollars, driven mostly by oil and gas exports. It looked like a perfect setup. Use the surplus to stimulate growth and reinvest. But that didn't happen. GDP numbers stayed positive overall, except for one brief dip in Q3 of 2021. Yet dig deeper and the real story emerges. Population growth from migration inflated those numbers. When you isolate individual output, it gets worse. GDP per capita shrank for 6 quarters straight between mid-2023 and late 2024. A tiny 0.1% uptick at the end of 2024 barely broke that streak, and even that was mostly a trade quirk. US firms rushed to import Australian goods before Trump-era tariffs kicked in. A short-lived spike, not real recovery. Australia's lifeline lately has been government spending. Back in 2015, public expenditure made up 21% of the economy. Last year, that figure hit 28%. Without that surge, the country would have tipped into recession. But here's the catch. The budget windfall is already gone. Deficits are back, and they are not going anywhere. Debt remains manageable at around 50% of GDP, which is far from crisis. Still, earlier this year, Standard & Poor's issued a stark warning. Australia's prized AAA credit rating is on the line. Why? Reckless spending promises and no credible long-term fiscal plan by either major party. So what's dragging Australia down? It boils down to 3 big forces. First, stagnant productivity. Second, a crushing housing market. And third, the dependence on China. First, productivity. This is the engine behind economic improvement, that is, how much value workers create each hour. If it stalls, the entire economy slows. no matter how high your GDP looks on paper. And right now, Australia's productivity has dropped to levels last seen in 2016. It's the worst showing among developed economies. Why? Low-skilled immigration plays a role, but the real culprit is underinvestment. For years, Australia funneled cash into consumption instead of future-facing investments. That gave the illusion of growth, but at the cost of long-term efficiency. Second, housing. Australia's property crisis is among the worst globally. The median home now costs nearly 10 times the median income, with major cities like Sydney, Melbourne, and Adelaide surpassing that threshold. This locks workers out of high opportunity areas and inflates debt. And as interest rates rose, mortgage payments ballooned, gutting household budgets. The result? Disposable income has collapsed back to 2018 levels. Among OECD countries, Australia is now dead last in income performance over the past decade. With families crushed by loans, consumer spending has dipped, further dragging down momentum. Third, China. Australia rode China's infrastructure wave for years. Iron, coal, anything the Chinese building machine needed, Australia provided. But China's pivot away from heavy industry towards sectors like semiconductors is already cutting demand. And when that demand cools, so do Australia's export revenues. The outlook isn't catastrophic, but it's far from comfortable. Australia's leadership has relied too long on luck. Resource booms, global trades, demographic inflows. But those aren't guarantees anymore. Without serious investment, housing reform, and a new trade strategy beyond China, the country risks drifting into economic stagnation. Australia isn't crashing, but it is drifting, quietly, steadily, towards something harder to detect and harder to reverse. The danger isn't chaos, it's complacency. Growth that doesn't reach people, a booming budget that already dried up, a nation convinced it's still winning because no one dares to admit it might be losing. The lucky country, unfortunately, may have already used up its luck. If you found this video helpful, make sure to check out South Korea's democracy under threat. In this video, we break down why the president was impeached, the political chaos shaking the country, shocking claims of martial law preparations, and what it all means for South Korea's future and global stability. Click the video to watch now.